Aloha and welcome. Here we are, first full week of the new year. And look at this. We have news catalysts every single day. And that's not to say we wouldn't have an unknown event happen to upset the apple cart, but let's just understand starting the year, starting the first full week, this is non-farm payroll Friday. So that's the big daddy on Friday. Everything else is leading up. On Wednesday, the 8th, we've got the FOMC minutes. Again, this isn't setting any new policy. This is just reviewing what they did in December. And obviously, the Treasury yield is having a big argument with that decision if you look at 10-year yields. Monday, we start out with a 9:45 a.m. and 10 a.m. news catalyst. So the whole point on surfing the wave here after a holiday week is timing. Let's do the timing. So first full week, we've got new week time and price. Time is first priority. And what we want to do here is probably wait till after 10 a.m. And that is the start of the silver bullet. And then we'll have the news behind us. We'll see which way it's going. So I'm looking at a 10:15 to 10:30 sweet spot if I'm either going to take off size or add size or trim and trade. That's the Monday plan. The idea here, though, is to size accordingly because really, to take home a paycheck for this week, it's only going to take one really good trade. And what I've noticed the last 5, 6 actual trade days is definitely we've got range. Range is high, and we are in a bit of a premium on a 1 hour, 2 hour price chart. We'll get to that later. But Tuesday, we've got a 10 a.m. Eastern Standard. Wednesday, so that's a doubleheader, 8:15 a.m., and then this FOMC minute. So I don't really want to get caught on this Wednesday trading beyond 10:30. I want to be not in the market at all, totally flat by the time the 2 p.m. happens. And then Thursday and Friday, it's going to be best to see if I've got profits, I'd rather do capital preservation till the New York Open after non-farm payroll. Because remember, last Friday, they jam-jobbed it up, they pinned it at the highs, and who knows if they don't do the opposite here. So I just want to play it real conservative, see how the week goes, and most importantly, be out and liquidated into cash by the end of the silver bullet on Wednesday. Invest in your trading success for 2025 with me, Coach Craig. Improve on your trade model execution with one-to-one coaching sessions. Have a trade accountability partner to help you focus on the right things in trading. Trade journaling, timing, trade location, using modest leverage, patience, and if you're going to focus on the numbers, ROI, return on investment percentage performance on a weekly, monthly, quarterly basis. Higher time frame. Since we're not open here as I record this, it's very early Sunday. I'm just going to do a daily chart on the higher time frame and look at this Bitcoin. We've gone all the way up to this black line, which is mid Bollinger Band, and that is a 99.0230. You've got a price candle here that is going above it. So we are going from discount to premium, strongest chart of the three in the middle of the S&P 500. That's what I trade. And what you've got is what we talked about here in previous videos was that 3 daily Bollinger Band on the lower. This was the setup that is not going to be happening all the time. We had it 1, 2, 3, lower Bollinger Band, that green line. And then we bounce off of it. And the first Friday of the new year, we go through the 3 EMA, which closed at 59.66. And we touched this red 9 EMA, which is 5995. That's important because We're flatlining on that 9 EMA, and the past 3 days at least, we had a gap. We came close, but we never pierced it or touched it. Friday we did, and we just closed below it. What I'd like to see happen is we either go straight up and keep driving to the middle Bollinger Band. If we drive through it, that's another 60, 70 handles up. That's asking a lot without a little bit of a retrace. And a possible retrace could be 59.70, a modest pullback versus a large one, because we're not over. This is a engulfing green bull candle that wiped out the previous two trade days, which was the 31st and the January 2nd. The right, not a lot to talk about. That's the NASDAQ. And again, you see very similar price pattern, bullish engulfing, right below the 9 EMA. The 3 EMA is 21405.34. So that does it for the daily high time frame. I'm going to be looking not so much in the Asia or the London Globex, but again, it's the timing. And what's the timing? We already know on Monday. It's going to be the silver bullet after the news catalyst happens. So next chart. Well, this is what's different in 2025. High dollar, high treasury yield on the 10-year. The VIX, we did lose 10% on the VIX last Friday. We're still holding inside barely this fair value gap, the yellow rectangle. But on the bookends, on the left and the right, let's analyze. The US dollar is got a new daily fair value gap. And I drew this gap because there's a volume imbalance between these two candles here. This is Thursday and Tuesday. And then here we are Friday. So Friday's candle did not violate. And unless we're going to break and close a candle below this red line, even then, it's this red line on the 108.041. This is a weekly, going many weeks back, buy side liquidity, and we broke above it, and we're staying above it. And it's been 4 trade sessions above it, and we're flirting now with 109s. And this is going to be, again, an inverse relationship for a bull market in equity indices. If this is going up and it's sustaining the up and it's not going down and breaking through these buy-side imbalances, micro 10-year treasury yields, look at this on the right side. We've got one fair value gap here that I'm looking at, and we are just in a flag, bull flag at 4.594. This is a direct competition with the stocks. We start to get some kind of volatility event, which I'm bet is going to happen in Q1. Something's going to rock the market at some point, and you've got a treasury yield way up here. This is absolutely going to be a problem with the high US dollar and the treasury yield. So this is why I favor a two-way market, unlike the market we've had in the end of 2024. The last 3 months, it was just a rocket ship straight up. I don't see it that way here for the next 90 days. But I'm going to trade accordingly. I'm not going to bet the ranch on everything on one trade. But these are the very important charts to look at. Next chart. These are my magnificent 8 right here. Apple. What's happened with Apple here? We have started, and look at that Friday bump we had in the market, didn't do anything. So we were flying high end of December. Now we're just stalled out. NVIDIA, big pop. That is giant. We've got a giant volume imbalance. Friday, we just jam job. This is a big portion of why the indices were so strong on Friday. So let's look at that chart and see 144.47 on NVIDIA. Tesla had a good day. We got back what we dropped. We had this multi-day drop here, and then Friday, boom, we had a nice day up. We're back up to 410.44. Google hanging in there. It doesn't look real robust, right? On the basically the range, 193s. Lower left, Microsoft just not into that at all. 423 on the price on the Friday close. You can see it did not overtake the prior 3 days at all. No breakout there, but look at oil. Oil is just jam jobbing. So we've had since day after Christmas every day, up, higher high, higher high, higher high, 73.96. This is going to be another problem for the Fed at the next FOMC meeting when they set rates, because if oil keeps jamming along with the high yield, forget about rate cuts. This is going to really hurt people in the pocketbook where it counts. So we'll see what happens by the end of the month, but I've got my eyes on this one. And Bitcoin here, again, nice. Let's see if we can break the 100. We've had 3 good days. Let's see if it can keep up. Just keep in mind, though, the S&P 500 and the NASDAQ are not doing as strong. And then the dollar. Again, the dollar, we've already covered that chart, and it's staying strong in the 108s, just under 109. So we'll see if that holds. Next chart. So the exercise, the discipline, the patience, these 2 elements are going to be what I focus on for these 2 charts, at least until 10:15 a.m. Eastern Standard on Monday. It's the rank on the left, and it's the 2-hour on the right with the Bollinger Band. So let's look at the Renko first with the Keltners. You can see the red line, 59.55. Here's my marker, 59.70. We'll call it 59.72. This is my mild retrace target between now and 10:30 a.m. Eastern Standard Time. I'm not going to deviate with short-term 1-minute, 5-minute charts. I'm staying with the Renko, and I'm going to make any adjustment to my position sizing at this point here. This is a key inflection point for me. On the right, you've got a 2-hour chart, not a 1-hour, not a daily. This is my sweet spot. Note the Bollinger Bands. Different than the Keltners, but still wide middle. The black middle comes in 59.48, similar to the zip code neighborhood of the red right here on the Keltner, the middle Keltner, 59.55 versus 59.48. I'm not even calling for that. I'm here in the low 59.70s. You can see we've got buy-side liquidity here, right here, and that high came in just under 6,000. So sure, I could give it 6,000, maybe even 6,012, 10, but I still am holding on to the lower 59.70s. In fact, I'll just call it right now, maybe 59.75 and lower. So that is what I'm going to do. That is my patience. And if it doesn't happen, it doesn't happen. But I'm keeping my eyes on this more intermediate term time frame on the 2-hour. And I want to see the catalyst on the news event. As far as lower areas, again, we pointed that out, the lower Bollinger Bands on the daily. So sell side liquidity levels, I really don't see a revisit down here into the 5,900 and below unless something really happens. I don't know if that's going to happen on a Monday. That could happen more later in the week, but I do see a possibility that we retrace in the middle Bollinger and the Keltner channels. So that'll be the secondary flavor of maybe keeping a runner short on for the mids. But what I'm doing is I'm building a trade position for a single trade win for the week. And I'm going to trade around it. I'm trading and trimming and trading for position. I don't expect to have the best position on Monday or Tuesday, but definitely by Wednesday morning, I will have made some profit into some cash so I can make my big move Thursday and Friday. Maybe I keep a runner until Friday if it's really great position. What's great position? Again, if I believe in a two-way market, because what's happening with the yields on the Treasury, what's happening with the dollar, I'm going to be looking for a range down at least to the mid to happen. And I want to be suited for that. But I'm keeping modest leverage, okay? And I'm using a big dose of patience here. So that's a wrap. You've got my strategy for the week. I'm not going to be in and out. I'm going to always have my finger in the pot. I'm cooking up a recipe. The recipe calls for getting paid, getting a payout, and being happy with that, and being consistent and following my rules, following my trade model. Aloha. Take care. Thanks so much to existing subscribers, and welcome to new viewers. Please subscribe, help support the channel if this content helped you. Take care. Bye-bye.